Welcome to this video presentation, How to Avoid Getting Burned in the Markets, presented by FFR Trading. In this series, we'll equip you with practical trading and investing knowledge while helping you to avoid the many pitfalls and mistakes many traders and investors make. In this week's video, we'll talk about understanding the broker industry. But first, let me introduce you to who we are here at FFR Trading and what our role is. FFR Trading is a due diligence firm for various investment and trading services. We've worked with dozens of traders in all markets, including stocks, options, futures, and Forex. In a nutshell, we've uncovered the many mistakes so many people make when considering trading or investing strategies. Our goal is to find solid investment and trading opportunities that we can pass along to you. We hope that this video can help you avoid some of the same pitfalls many investors fall into and help provide a primer on the markets, though not a comprehensive thesis on the subject. For advanced education on the markets, we'll discuss the unlimited literature available on specific topics. To successfully trade or invest in the markets, you need to understand how the players in the trading and investing industrial complex make money. First and foremost are the brokers. They make money whenever you trade. If brokers had their way, they'd like to see you trade as much as possible while helping you as little as possible. This way, you could keep trading and keep paying them in commissions. Brokers also make money on order flow. They often combine several smaller trading orders and then send them to preferred dealers. For this flow of trading orders, they receive payment. Some trading systems are purposely designed to overtrade, which makes the brokers who promote these systems very happy. Remember that brokers don't always care whether you win or lose, as long as you keep trading. Think of it as residual income. They convince you to open a trading account, then they make income as long as your trading account lasts. Brokerages also have an emotional edge because human nature is fickle. People get greedy or fearful, and they make irrational decisions. This results in overtrading, which then generates more money for brokers and trading software developers. Similar to Las Vegas casinos, the brokerage houses always have the statistical edge and always win. A less than reputable broker will lock in your account with a well-known investment and then pressure you to make very risky moves with urgency. If you don't move on this opportunity now, it'll be gone forever. It's a line that you may hear. Watch out for phrases like limited time or you'll only see this once. A reputable broker will be willing to give you all the information and answer any questions before you purchase. Number 2, churning accounts. Churning accounts is one of the more common ways investors are taken advantage of. This is when a broker has you overtrade your account. Remember, the broker only makes money when your account makes trades. Therefore, they want you to make as many trades as possible. They will suggest this strategy as being less risky because you're not holding trades very long. Number 3, breakpoints. Breakpoints, most commonly seen in mutual funds, are discounts to the commission based on the amount invested. A dishonest broker will invest an amount of capital only up to the breakpoint, because $1 more would lower his commission. Reducing the funds being spread out over many companies will help take advantage of the discounts. Number 4, don't be afraid to question your broker's advice. If they're reputable, there won't be any issues with fully explaining the investment advice. If there's any pushback, that could be a red flag. Trust your gut. And number 5, it's your responsibility to check your accounts on a regular basis. You don't need to be consumed with checking daily, but at least a couple of times a month. It is very seldom that we allow our friends to walk around with our wallets without checking to see if everything is in place. Why wouldn't you make sure your broker is doing the right thing? Here are some suggestions. If you have questions regarding commissions, don't be afraid to bring them up. If your broker is honest, they won't have issues addressing them. Take the time to fully read new account documents. If a broker acts like this is a burden, you're with the wrong broker. If a broker is unwilling to provide written information, this is generally an indication that they aren't telling you everything. Watch out for high-frequency trading and churning of your account. In conclusion, know that there is still money to be made in the markets. Take it slow. Find strategies that match your unique personality. If possible, work with a trading team or at least one other person. They'll be able to see your blind spots when you can't. Above all, don't trade with money you can't afford to lose. At the end of the day, it's only money. Your family, friends, and your health matter most. Aim for a balanced life. If you aren't getting some enjoyment out of trading or investing, then chances are you might be in the wrong profession. Thanks for joining us. We hope this book has helped you on your journey to success in the trading markets. If you would like to obtain your own copy of our book, How to Avoid Getting Burned in the Markets, email us at support@ffrtrading.com.